Hey, good morning, everyone. Thank you so much for attending today's sessions about collecting payments, how merchant solutions expand payments options for you as a client. We truly appreciate your time today. Uh, I wanted to make sure everyone is aware that we will be pre-recording these sessions for you, but all attendants will be here present in case you have any questions throughout the presentation. I'm going to introduce myself. My name is Kathy Rincon. I am the Senior Vice President, Treasury Management Sales Director for City National Bank. And with me today, we have Chris Schmitz. He's the VP Sales Success at Talus Pay, which is our number one partner today.
Yeah, great to be here with you. Yeah, with your payments partner, Talus Pay. Can't wait to talk to you all today.
Thank you. This presentation is intended for informational purposes only and does not replace independent professional judgment. Every effort that has been made to offer current and accurate information, but errors can occur. City National Bank of Florida assumes no liability or responsibility for any error or omission in the content contained herein. This content of this presentation are not to be reproduced or distributed to the public or press. Please note the product information on this deck has been provided by our partners from Talus Pay team. Today, we're going to be covering the following agenda. Number one, who is our partner? Number two, how we're going to be talking about introducing our merchant processing, understanding processing fees, which is a key component of our day-to-day. There's always a questions about that. Challenges that our business are facing today. What solutions do we have? How we mitigate risk? And we're going to have some questions and answers. You're going to interact with us so that we can help you understand a little more about merchant service solution and how to expand your payment in your business. So again, our partners is Talus Pay, right? They have been in business for many years on the technology side. Large enterprise, they work with large enterprise to small businesses. Talus Pay offer payments processing solutions that will help you meet your client needs. And for that, I'm going to let Chris give us a little more detail and information.
Yeah, thank you, Kathy. So Talus Pay has been around since 2006. We have over 22,500 merchants processing every single day with us currently. And we have a pretty large team. We have over 225 members. Within those members, we have all different departments, and that's really where we come in to play with this partnership. We have partners that are going to help you sell and know what the best solutions are. We have partners that can help with the customer service. And we have partners that can really help through the whole process here. And that's why we love partnering with you guys. We've had a lot of success with your bank over the years, and now we just want to take it up another level so that you can feel more comfortable with what we have for you. So one of the things, so this is an interesting field, right? So it's very simple in its overarching ideas, but there's a lot of moving pieces to it. So it can get a little bit confusing. I'm going to try to simplify it for you today so that you have a pretty good understanding of how this whole process works. And then maybe you'll feel a little bit more comfortable in talking to the merchants that you guys can work with. So some of the processing basics. Credit cards haven't been around all that long. In 1950, they started with Diners Club, if you can imagine that. That was the big credit card back in the day. If you ever go back and watch like old movies, they used to have books that they would look in to make sure that everything was or that they were an actual card that they could use. And they used to use the clunkers. Well, we've come a long way, right? We have a lot of different technologies and a lot of really cool things that are out there. It changes all the time. So new technologies are embraced. You can kind of see that through the history here, but even more so today. Things change all the time. That's why we want to be your partner, right? Because that's going to allow you to focus on your side of the business while we're able to help you really put some things together to help your merchants. There's certain things that you need to know. So we'll go into card brands a little bit later, but rates do change twice per year. That's set by Visa and MasterCard, really. They're really powerful industry leaders. So pretty much what they say has to go, right? That's pretty much how it goes. There's not a lot of ways around that. If people want to use cards, then that's how they would have to do it. So during those times, because of costs and everything, those costs usually do go up very minimally, but they do change twice per year. One thing that everybody should know is that all processors pay the same cost. That's called interchange. We're going to go over that in a minute. But a lot of times people don't understand that. They think that they can get a better deal on cost from other places. It's not possible. Visa, MasterCard, and the issuing banks all have the same cost that they give to every processor that's out there. And so really where it comes into play is, can we add extra value to them? And can we give them a good price on top of that cost that's going to really make this efficient for them? The card brands, Visa, MasterCard, like I said, you'll also have Discover out there and American Express are really the other two major players. But Visa and MasterCard are about 85% of the card brands out there. They really control a lot of the rules and how we do things. So what is processing? It's very simple to understand, but what we do is we establish and manage a relationship so that the merchant can focus on business, not processing. What that means is we're going to try to make the tools that they use to take payments as simple as possible, and really so that they can have as many tools as they can to bill in different ways. So if they need to send an invoice, if they need to send, or if they need to take card present, if they need to do things online, we are the experts in knowing the way to set those up. So we try to keep it simple for the merchant. The merchant can focus on their business, not processing or equipment. They just know that they have the ways to do it and they know how to do it. And they have a trusted partner in TalusPay. We are one of those experts that we have our customer service all based in-house. And we are one of the most trusted companies in this industry.
And Chris, going back a little bit to that, we like to make sure our clients have a health checkup on a yearly basis. Sometimes you have years and years with your current provider and you haven't had anyone consulting you and looking into it to see what other technology is out there. What else can I do for my business, right? Can I save money maybe? Can I have other ways of processing different than the one that you have today? So it is important that you review this on a yearly basis, and that's where we're here. We're here to help you review, consult, along with our TalusPay partners to make sure you have the best product and you're paying, what you need to pay for the services that you're offering.
Absolutely, Kathy. It's actually, I love this industry so much because what we are able to do is help merchants grow their business. But there are some players in this industry where, just kind of like your cable bill, you think you sign up for one thing and then 2 years later you look and you're like, wow, I'm paying a lot more than I thought that I was. So it's really important to get that review done. We don't raise things along those lines. But if you have a customer that banks with you, they may be using another processor, that's a good reason to kind of bring up why it's a good thing for us to review it every once in a while. If nothing else, just like you said, Kathy, is a health check.
Yeah.
So the major players, you can kind of see TalusPay is in the middle there, that we really deal with. So the merchant, those are your customers, right? So when they're your customers, we want to make sure that you understand that we view them as extremely important. We want to be an extension of you. So when we're servicing them, we want to make sure that you are comfortable knowing that we are going to treat them with kids' gloves. That's very important. Then you have card brands. So we kind of talked about them. Visa, MasterCard, Discover, American Express. They're the ones that come up with the overall cost of those cards and different types of cards, some of which we'll get into a little bit. Issuing banks, so like City National Bank, other banks that are out there. If you watch commercials and you see different brands of Visa and MasterCard, those are often considered issuing banks as well, right? Like whoever is giving out the card and having that out there in the field to be able to take payments, That's kind of an issuing bank situation. You usually do not get a card directly from Visa, right? You usually will get it from some other place. And then the card holder, of course, we want to make the payment experience really pleasant for the card holder, because if it's not pleasant for the card holder, meaning that I'm walking into your merchant and making the payment, if it's not easy for them to make payments, then the merchant's going to be unhappy, and then you guys are going to be unhappy, and then we got a lot to fix, right? So we want to make sure that all four of those pieces are moving really well. So understanding processing fees. So this is where it gets a little bit confusing, but just follow me here. We're going to try to simplify this as much as possible. So I had mentioned earlier that there's a hard cost on all cards that are out there, but there are a lot of cards. Just to kind of give you an example, there's over 800 types of visas, 800 types of visas, and all of them have different rates and all of them have different costs. So just to kind of get down into the definition of what that means is, I'm going to be talking in basis points today. Your industry is probably the most familiar when I talk about basis points of what understanding you guys and mortgage guys, right, are understanding basis points are. So I feel pretty comfortable throwing this out here to you. 1 basis point would be 0.01% out there. So if we're talking about 75 basis points on a sheet, it would look like 0.75, right? 125 basis points will be 1.25. That's out there. 151 is equal to 1.51. So that's just the basis of the language we're going to be speaking for the next few minutes here. So interchange is the cost that is set on each type of card. There's a number of different pieces to it of why cards are priced differently, but let me kind of put it to you this way. You see commercials for like rewards cards, all different like points back, travel cards, all those kinds of things. One of the reasons that some cards are more expensive than others is because that's how those rewards are paid, right? So it's kind of a backwards thing. The merchant is the one that's actually paying those. So if somebody comes in and uses their Disney rewards card, the interchange on that card is going to be more expensive than, say, a debit card. A debit card is really low risk. It's coming straight from their bank account. There's no rewards associated with it. So that card cost is going to be lower, right? So interchange can be all over the place. That's why there's 800 different types of Visa cards. And this this kind of explains things. When you look at interchange, usually there's going to be two different costs associated with each card type. One of them will be the rate. So in this instance, you have the 1.51 would be the hard cost of that card. No matter who they're processing with, across the board, their interchange on that card will be 1.51%. Then there's also an item fee. So that is 10 cents. So 1.51% and 10 cents is the hard cost. No matter where they're shopping, or no matter who they're processing through, no matter who the processor is, those are the hard costs that are passed through. A lot of times you'll also hear them pass through fees that are passed through to us that, of course, we need to make sure are charged properly to the merchant so that we can cover those fees. And then we'll go into, and here in a second, the other parts of that as well. Card brand fees. So right now, generally speaking, the card brand fees have attached a 0.14% charge on top of interchange. Those are the fees that they're charging basically to be running the system, right? To be out there and being able to have information readily available. So they take a smaller amount of this. I'm pretty sure they get a piece of that interchange too, but they just like it to look like we're only making 0.14%. So there's different interchange card brand fees, but the one that you're going to see almost on any statement that you look at, you'll see Visa card brand fee at 0.14%. Sometimes you'll see it at 0.13, but in general, this is what you're going to see. So that's on top of the 1.51, right? So right now we're up to 1.51 for that one particular card type plus the 0.14. And then there's the processor fees. So why people have to use processor? Well, first off, they have to use processors. Okay. So we are a processor, right? And what that means is we actually, first off, we make sure that the merchants that we are processing for are a good, safe merchant, right? Just like you guys do with underwriting and banking and making sure that you're working with good customers. It's the same thing with us. There's risk involved of making sure that people are going to get the products that they've been promised, all those types of things. And then the other part of it is that we move the money around, right? So if you were to actually just process straight up with Visa or something along those lines, it would be about 3 weeks before a merchant actually got their money. So what we do is we do it so that they have their money within 1 to 2 days every time a card is swiped. They batch out at the end of the day, which we'll talk about in a little bit, and then they will see that amount that they took in cards for 1 day into their account. So that's where our rate comes into play, right? So this is on top of interchange and on top of the card brand fees, whatever it is that we decide is a fair market value. And a lot of times we'll decide that based off of a couple things. One will be what the cost is that they're processing with right now. So we'll take a look at their statement and see how they're being charged right now, but also if we can add any value to how they're taking cards, and if we can add some different ways for them to do business, like if they don't have a way to take online ordering, or if they don't have a way to do invoicing right now. So a lot of those things are going to come into play, so that when we give them a quote as to how they're going to be priced, that's what comes into play. So in this example, we priced it out at 50 basis points over cost, is how we would say that.
All right, so Chris, this is a lot of good information. I love it. I'm pretty sure the audience is a little confused because it is confusing, right? A lot of numbers. This is maybe not your cup of tea, right? You're as a business owner, you're trying to grow your business. You're making, looking for someone that can help you understand. The credit card world, is challenging, right? Because there's a lot of number of credit cards, right? Like you mentioned, 800 plus type of credit card, Visa card, debit cards, cards with rewards or rebates. I mean, you name it, right? It's very difficult to know exactly how much will be the fees, what will be in your cost. So it's very challenging. So the real question, right, we always have is, why should I change? Why should I look for another provider? I mean, how do I know, right? If what I have is what I need. What is my rate? How does it work? So we want to offer you free consultation, right? We want to help you. That's why we're doing this. We want to make sure that you have what you need for your business, that you have the knowledge necessary, right? So that you understand how you are processing. Credit card processing, one of the biggest. If you ask me, I have zero cash in my wallet. So everywhere I go, I either pay with my credit card with rewards because I like to travel, right? Or I pay with my debit card. Or sometimes we even pay with our Visa gift card that we got when we, Christmas time, birthday time, people give a lot of gift card as a gift, which I love, by the way. So how can I make sure that what I have is what it works today for me, right? So you as a business owner, right, you're concentrating in growing your business, right? And just making sure that the services that you have today are the services that you need, right? So how do I know I have what I need? How do I know that the solution that I have is the one that is suitable for my business? What type of benefits do I have, right? We run through this cash flow conversation with our clients today on a day-to-day. We try to understand what works best for them, right? What all-in solutions they can have, right? What is less cost effective for them, right? Is it a gateway? Is it, maybe the machine? Do they need to take the calls via the phone? Like, we have all the type of business. Is it business to business because maybe you're a manufacturing? Or is it business to personal or personal to business because you're a retailer, right? We have solutions that will fit your needs based on what you guys need. And we will look into the best pricing for you. But it is important that you open up and give, again, that opportunity to us or to anyone that you look into it, right, Chris? Because things
Yeah.
change. Technology goes like this, right? Every
Yep.
day we have something new to offer. So with that said, Chris is going to walk us through different solutions, right? That
Mhm.
today we offer through Talos Pay, and that could be beneficial to our clients, right?
Yeah.
And before we jump into that, we do have a lot of clients that today they want to take merchant services and they don't know how or what they need. So
Right.
based on the conversation, right, discover conversation, understanding, how are they receiving the payments today? Are they domestic, international? Are they over the phone or face to face? Based on all of those criteria, we give them the best solution
Right.
that will benefit them, right? And it will be cost effective.
Yeah.
Let's move to
And
the solution. I think that will give the audience a lot to information to review and take. Go
yeah,
ahead,
yeah,
Chris.
perfect. Yeah. And I think that that's the thing, right? Like, there's so many types of businesses. You just saw a few down there at the bottom, right? If you start to think through, retail is probably a little bit different than restaurant. Restaurant deals with tips. B2B is different because they're invoicing customers out there. They might have they might have terms, right? Like because they're a wholesaler or something. So the different amounts of types of processing is really important, but also knowing the rules of how we can really add value to those customers as well. Because depending on the type of business that they have and the type of cards that they're taking in different pieces like that, we can offer solutions. So what you do see a lot of times is you'll see a business with just the wrong solutions, right? They just went for the easiest thing. Sometimes you'll run into companies like Square or something along those lines. Whenever you see that, that was an easy solution for them to get, right? They just were like, I've heard of Square. They go on and do it. What's not offering them all the benefits that they probably could be getting by working with a real processor. Like the reps that we have partnering with you are some of the best in the industry. Jacqueline and Tom are two that come to mind. Jacqueline was just recognized at ETA, so it is the biggest processing organization on the planet, and she was recognized as one of the top reps in the world. Because she digs in and understands those solutions. So,
And Chris,
yeah,
just so the public knows who she is, she's one of my partners here. So
yeah,
we work with her hand in hand,
oh, she's
along
awesome.
with our clients, to make sure we have that conversation that will lead us to make sure we're giving them the right solution. So
Yep.
she won. She's very good, let me tell you.
Oh
So
yeah,
she's
she's
part of
great.
my team. So
Yeah,
I just wanted to brag a little bit. Go
yeah,
ahead.
yeah, for sure. And that just means that you're going to have them longer, right? When we talk about why that value is with the bank, when we talk about deposits and all those kinds of things, what we want to do is create something that's sticky so they're with you longer. If they add this product, which is an easy sign up, which Kathy can tell you, it's not a complicated process. This doesn't have to be something that takes a month with a ton of paperwork. This can be done in a day. And if they add that on, they're usually more likely to add another product down the line, which means that they'll even be there longer and they're depositing more. So you can kind of see how this all comes together and why it's really important. So when we come back to this slide here, where transparency is key, it's one of the main things, right? Some statements that you get out there that you're going to see when people get them, they just stop looking at them because they don't even know what they're looking at, right? It's like, is this a statement? I don't know. Like, can you tell me what this is saying? There's so many numbers. They're like 12 pages long. A lot of the times they don't even really have what they're charging them on there, like for above cost or anything. They're so confusing. So that's why we're really good at that. We have some tools that can analyze it down to the 100th of a percentage point to make sure that we're accurate when we're doing something. But with us, we try to also make it very simple, right? So we don't have contracts. First off, we want to come off as making sure that people understand that we are honest. If we are not giving them what they want, then they have the right to leave, but we don't lose very many customers ever. And also when we're billing them, it's going to be flat out in front of them exactly what they're paying. They'll be able to see their rate. They'll be able to see all those things. So in the examples that we just had a second ago, where we were talking about what the rate of that particular card was 1.51, which is about an average credit card. Not a lot of rewards on that card, probably, but just a regular kind of credit card that's out there. And then we have the Visa fees or MasterCard fees at 0.14. On that slide, we showed that we were going to charge them 50 basis points over cost. So what their total cost on that card that they would take would be 2.15% and 20 cents, right? So you can see how that kind of adds up. And you can kind of see how this starts to add up, right, for the merchants when they're like, why am I getting charged so much? Well, most of the cost is not coming from anything that we're charging them. It's actually coming from the type of card that they're taking.
And Chris, normally when we're visiting clients, and maybe some of them are here with us today, they always come back and say, we never understand our merchant statement because there is so much with them, right? Much. The rate, the per item, is an interchange. But guys, sometimes it just depends on how the card is, right? Is a card present or not present? Did you key it in or not? So that's why it's important to, when you are setting it up for the first time, that you give us us or any other provider, right, all the details, because based on that is how we're going to price it the best for you. But if we don't know that the majority of the cards are going to be not present, right, we're giving you the pricing based on the card present, right? And this could happen anywhere. That's why health checkup every year, reviewing what you have, running it through consultants and people that really knows the industry is a plus. I cannot emphasize that enough.
Yep. So, yeah, and it could just be a shift in how you're taking card. Like if you think back during COVID, card not present became a lot more prevalent, right? Because people just weren't out and about. So being set up in a way that you could get as much information when taking a card was important, because there's two kinds of risk involved in a card. So one is the type of card. I'll kind of go over that in a little bit. And then the second is how the card is taken, right? So if you think about it from a safety measure, if somebody has their card present, so you can see it over there on the far right of the slide, card present, you can see that the name on the card matches the person that is there, and they are taking and they're swiping or tapping or whatever it may be the card. That's the most secure type of payment that's out there, right? Makes total sense. The card is there. You can see that there's a card. You can tap the card. You can do whatever. It's really secure. If the card is not present, meaning that somebody's either calling it in or something along those lines, then that ups the risk. So you can see that there's a higher cost involved in that type of transaction, right? Because there's more fraud involved in that kind of thing. If somebody has a stolen card and they call a transaction in before the card gets canceled and they run something, right? So that's why there's an increase in cost, because there's an increase in risk. And then keyed in, once again, is just the highest of that, right? So keyed in is meaning that somebody is actually typing the card information in. So there's really no face-to-face transaction whatsoever or voice-to-voice. This is just somebody out there on a computer typing something in. It can be a higher risk involved there as well. So there's things that we can do to qualify them better for those types of transactions. If it's 100% online or something along those lines, there's different information. So that's why a lot of times you'll have to enter things in with your address and your zip code, like all those types of information. What that is doing is it's matching up with the database of the card brand to make sure that that is the correct information. If you don't put all that information in and just put the card number in, then you're going to be charged at the top of the rate chart, right? So we want to make sure that you're set up right. It's really important that you're set up right, because if you're not, then you're starting to pay, see that 3.5 plus 15 cents per transaction on every transaction would be a nightmare, right? That would be horrible. So we want to make sure that you're set up in a way that maybe we can cut that down to a card not present or some other way that we can do that. And we have the expertise on how to do that.
And Chris, not only at the setup time, but in recurring basis, right? Because things change as business grow, depending on your business, things changes. We shift from one to another. So sometimes we do see clients, Chris, that they go like, oh my God, they keep increasing my transaction, my per item, my rate. And he said, because maybe, now you're not doing more as much as card present with signature. Now you're just doing no card present, or you're keying in. So it is important to review.
Absolutely.
I can't emphasize that enough. So
Yep.
very important.
Yep. Okay. And I'm just going to really go through this one quickly. There's different pieces of what it is. So authorization really is that really quick timing where you swipe your card, or you put your card in, and it comes back and it says that it's approved or it's not approved, right? So that's really what an authorization is. That's what our main job is to make sure that there are funds available that are going to pay for this transaction, and that the card is active, all those kinds of things. The system goes into all these different algorithms and figures it out and makes sure that it is safe. So the authorization is probably the most important part of the transaction, right? Making sure that if you get an approval code on a card, that means you're going to get paid for it, period. That's it. So if approval is on there, then you're going to get paid for it. Now, settlement at the end of the day is also sometimes called a batch. And what a batch is it's a number of settlements. So at the end of the day, it takes all of your authorizations, puts them into a group together, sends it off to us. We work with the different banks to start moving the money around, right? We start moving the money around once that settlement happens. When we have that money settled, that we know where it's coming from and where it's going to, then we release it. It just depends on the time of day. Sometimes that'll be in their bank account the next day. Worst case, it's usually going to be 2 days away. But that's kind of how the settlement works. If they don't do that settlement, there's two ways to do it. One is they can auto set it so that it'll do it every single night. That's what we usually suggest for like retail, business to business, those types of things. Sometimes restaurants like to do it manually at the end of the day because they have to do some different things with tips. And sometimes they're just open a little bit later because the customers are there. So when they do that, they got to remember to do that, because if they don't batch out at the end of the day, they won't get their money. That's really important that they do. So that's authorization and settlement. So what we just kind of talked about too were, the different risk pieces. So this is just something that we'll kind of go over again. When we look at risk, in person versus hand keyed, right? In person, of course, is lower risk. Tap, dip. So tap is actually, believe it or not, is the most secure way to take payments. So even on Apple Pay, Google Pay, anything along those lines, that is a really secure way to do it, because it has to really follow your identity, right? It's matching you up with that card. So it's a really safe way to do it. Dip, if you remember a few years ago where there was this craze of everybody having to switch to the chip cards and having the machine to take the chip cards, it was like the Wild West in our industry. It was craziness. So dip is another way that it's adding an extra layer of security for the merchant and for the card holder. What that is supposed to do is it was supposed to take it to a place where you're no longer handing your card off to somebody else, that you're actually inserting it. If you remember, the machines used to be turned around the other way, and you would hand your card to them and they would swipe your card. Now, it's only been a few years, but most of the machines are turned around to where you're making the actual payment, right? So the card doesn't leave your hand. There are certain instances where you are still going to swipe your card, or it needs to be keyed in. If it's keyed in, it's usually going to be the employee doing it. Is just as you go farther to the right, that's usually going to give you a little bit more cost, especially when we get to keyed. And then card not present, again, it's just a little bit higher risk, right? Hand keyed, over the phone, internet stored card. But also think of this like this is what we're talking about when we talk about solutions. if I'm a customer, right, and let's say that a heating and cooling guy comes to my door and they ask me for payment and they don't have an easy way to send me an invoice where I can easily pay it on my phone, or they have a device to where I can tap my card and they just take my card and call in my number, I don't feel great about that, right? So that's how we can make sure that your merchants are set up with the best way to actually take payments as well, so that they are qualified transactions, but also so that their customers feel really good about the information that they're giving them, right? I hate it when people call my number in. It's just one of my biggest pet peeves. I've got a lot of sales out of that, but whenever it happens, I hate to see that happen. So this is where we can really focus in on how are they taking payments. If they're taking card not present, then let's get them into a place where they can be taking card not present in a more comfortable way, using invoicing or something along those lines, or that it can become a card present transaction instead. Mitigating risk. So this is another piece. So we've talked about risk a lot. This is why our industry is so similar to yours, right? So when we talk about getting a business loan or getting a home loan or whatever it may be, there's risk factors involved that your underwriters look at to make sure that things are going to run through properly and that you have a good customer. It's the same thing that we do on our side, but also there's two parts to it. There's risk based on how the payments are being taken, and then risk based on the actual merchant type. So if you see here, assessing and mitigating risk, you'll see that the lower risk over on the left, PIN-based debit, if they have a PIN number, right, they have to probably know the card information to be able to do that. Moderate or consumer credit card is really a credit card, kind of like your starter card that doesn't have any points or rewards on it. Then there's a rewards card. Those cost more because there's rewards, and that's how they're paid for. Then corporate issued credit cards. This one threw me off when I started in the industry because I was like, oh, those would be less than a rewards card, but actually they're the most expensive cards to take out there. And the reason being for a couple things is companies pay their credit card bills slower than other companies or than individuals. They just do. There's less pressure on them somehow. And they pay it. Usually they're at a 60-day behind rate in paying their credit cards. The other thing is it's a lot easier for a company to go bankrupt and disappear and have debt out there than it is for an individual. So, and they usually run up a big bill. So there's a higher risk of a loss out there. So those corporate brand cards are more expensive. That's, again, why it's really important for these B2B customers to talk to us, because there are ways that we can mitigate that risk for them and lower that interchange cost for them if they are taking cards in a certain way. Really important one there. That's one of the biggest things that we can do for your business customers. And then signature-based debit, it's also low risk because it's just checking the bank account. If the money is there, they put a hold on the money. Like when you walk out of the grocery store, you can look on your bank account after using your debit card, and you can see it's already in your journal, right, of the transactions you've done. That makes it super low risk. So anytime that you're working with debit is going to be pretty low risk. That's why they're the cheapest cards. So then on the flip side, there is also the types of industries that are out there of lower risk and higher risk. Some of the lower risk that you're going to be talking about, what we're looking for is small average ticket, low chargebacks, meaning that people aren't calling in and being like, I didn't do this, I wasn't there. We'd love to see card present, good financial stability, meaning they've been around for a little bit, low fraud, no delay in sale to product transfer. So examples: retail, restaurant, sporting goods, quick service convenience. Restaurant is about as low risk as you can get because people are paying for their food, getting it, eating it, and they're done, right? And it's usually a pretty low ticket unless we're eating real fancy food. But even at that, comparatively to some of the B2B stuff, is going to be more expensive or less expensive. So medium business, low to medium chargebacks, larger average ticket, blended card present and card not present. So you're going to have kind of a mix there. Mixed financial stability, service-based businesses, some future delivery. So future delivery is a big thing, right? If they're paying for something and they're not going to get what they're paying for a while, especially if it is a product, that throws kind of up a little red flag, right? Because what if they go out of business tomorrow? They never give the customer what they ordered. So a lot of times when you're dealing with like furniture stores, one of the questions we'll ask is this a cash and carry kind of place where they have the furniture in stock, you're going to pay and they're going to take it, versus you're paying and they're going to deliver it to you a month and a half later? Because if you remember during COVID, like you couldn't find a couch anywhere somehow or a desk. Like if they're going to send it to you a month and a half later, they're like, okay, we need to make sure that this company is financially secure enough to be able to hold those funds and be able to do it later, right? So examples of that: health and beauty, telecom, attorneys, utilities and services. So those are in the middle. Higher risk, they have a real high average ticket, higher chargeback, larger average ticket. That's the same thing. Card not present, online, mixed financial stability, future delivery, risky industry, and brand new business. So examples, some gun stores, especially online, like we can deal with gun stores. And again, high risk doesn't mean that in this list, doesn't mean that we can't really work with them. We're just going to have to get a lot more information on them to be able to work with them, right? And just kind of vet it out, just like you guys would do with a loan. Same exact thing. Jewelry store, subscription-based businesses, all those kinds of things. Some of the things that are off the table, anything with CBD, marijuana, anything along those lines. Most banks that help us move money around are not comfortable with that yet. So that is kind of off the table, and that would be considered a high risk that we wouldn't be dealing with.
All right, Chris, I think this has been fantastic. A lot of information to grasp, right? Thank you for your time. We truly appreciate it. If you here with us today would like to have a consultation, would like us to review your current provider, please don't hesitate to contact us, right? You can email us, you can call us. We're here to support you.